Well, Shopify beat sales and profit expectations in its latest quarter. The Canadian e-commerce platform saw sales jump by 25% compared to the same period last year, and its profit margins improved as it cut down on expenses. For more on Shopify's results, we're joined by Ken Wong. He's the managing director of software research with Oppenheimer. Thanks so much for making time for us this afternoon, Ken.
Oh, no problem. Thanks for having me on.
So I'm looking at your newest note right now on Shopify's results, and you're referring to the new Shopify here. And so can you describe to me what you think characterizes the new Shopify?
Look, I think what a lot of investors needed conviction in was that Shopify was not going to grow at any cost anymore. The hope was that this would be much more balanced, more profitable growth going forward. And even though they did cut costs pretty meaningfully in Q2, I think there was still some investors that were waiting for the true evidence. And I think this quarter demonstrated that in heading into Q4, typically a higher spend quarter, they're messaging that OpEx on a GAAP basis should actually trend down. I think that was the final piece of evidence necessary to get people to realize that this isn't the same old Shopify. Right, we're looking to potentially have high teens exit free cash flow margins for fiscal 23. Just 12 months ago, this was a money-losing business. So clearly, we're on the right trajectory from a profitability perspective.
In terms of those operating expenses, I was reading into the commentary from the conference call, and the company says that it has started hiring again, but doing it at a slower pace, and they're being pretty selective about it. But this does follow, some pretty significant job cuts in 2 rounds for Shopify. How do you see Shopify moving forward with this? If they are starting to do some hiring, do you think that still works? That still allows its operating expenses to be sustained at the sort of levels that you're looking for?
Oh, for sure. Look, I think the message was heard pretty loud and clear. The hiring will be very selective from a total headcount perspective. I'm assuming that headcount will be largely flattish going forward, with again maybe some hiring on the edges for their enterprise motions, maybe around AI, which obviously is a sort of a hot topic right now. But I don't expect this to be broad-based hiring. I think kind of one of the underlying messages that we came away with was, we didn't go through all the hard work to get to the margin profile that they're at today, only to reverse course. So my expectations are that the margin trajectory continues to trend upwards.
Yeah, that's interesting. On the AI front as well, that came up on the call too. And the president, Harley Finkelstein, speaking about how AI is for everyone and saying that its capabilities should be captured and embedded across the entirety of a business, pointing to Shopify's Shopify Magic suite of AI-enabled software. How significant is Shopify's offering there with Shopify Magic?
Look, I think all things AI at this stage is we're taking a to be determined type of an approach. But I think what we'll see from Shopify is what they've consistently done throughout the history of the business, which is you take high-end enterprise capabilities and try to democratize that across smaller merchants and to help improve the customer buying experience. From a revenue perspective, I don't see it as a direct needle mover, but I think it will help improve merchant onboarding, which should drive subscription. And I think indirectly, it'll help consumers, find things to buy a lot easier. So, that should drive conversion, help drive GMV, which is a large portion of the company's revenues.
The AI features at this point, they're just included, aren't they, Ken? Sort of free add-ons?
Correct, and that's largely consistent with most software vendors out there. I think in any situation where there's determined to be outsized value created for a merchant, I do see opportunities for them to potentially monetize on specific modules. But for now, it is baked into the platform.
Okay, so at some point they might be able to monetize that part of the platform. I'm curious about the volume of transactions that Shopify saw. It was an increase or a beat above Wall Street's expectations. And when you're thinking about the consumer right now, is that a bit surprising for you to hear that the transaction volumes were actually greater than analysts were expecting?
Yeah, that definitely was a source of surprise. I think most analysts were assuming perhaps high teens GMV growth. They reported in the low 20s, especially in this type of an environment. I think perhaps what was more surprising was as they messaged the Q4, it also met consensus expectations at high teens growth on a reported basis and low 20s on an organic basis, especially when I think right now you're seeing across the headlines, a softer consumer sentiment. I think investors largely worry about, what Black Friday, Cyber Monday, holiday sales could look like. So, having a 4Q revenue number that largely lines up with consensus expectations was, for me, pretty comforting given the macro backdrop.
So give us a sense what you're thinking for Shopify shares. We're looking at the TSX version. You've got the U.S. listed one on your note here in terms of your price target. But give us a sense of how much room you see or upside you see for Shopify shares.
So we have an $80 price target, so that that does point to additional close to 25-30% upside even from here. Our valuation framework is largely built on the fact that we believe that this will be a cash flow generating business going forward. We're assuming roughly $1.5 billion of cash flow in fiscal 25. And with a potential trajectory of 20% growth on that number, from a valuation perspective, we largely follow a DCF. We think that the business can grow high teens and generate mid-20s terminal margins, and that helps justify our $80 price target.